So let's get started. I'll start by talking about the very basics of GST just to ensure that your understanding is proper, and then we'll get into the first set of questions. Okay. So let's analyze what are the types of questions that they will ask in each kind of topics as well that we should do. Okay. So my first set of discussion would be the basics, which would be we should reach at first type of question in GST called as net GST computation. Okay, this is the first set of discussion that I'm going to have, but I'm going to discuss all the relevant basics towards it. Okay, so let's try to understand the fundamental basics about GST here. Okay. So to just get you an introduction, we should understand what is the model of GST that we have in India. Okay. What's the model of GST that we have in India? It's called as dual GST model, right? The model of GST that we have adopted for our country is dual GST model. What is dual GST model? In dual GST model, the taxable event that we have, which is called as supply, has been classified into intrastate supply and interstate supply. Okay. So when the supply is intrastate supply, that is supplies within the state or union territory, instead of one GST in dual GST model, we have two GSTs that is applied. When it is interstate supply, that is supply between the states and union territory, we have a consolidated GST called as IGST or integrated GST is being levied. This is our fundamental understanding. Now, because of the new addition in our subject, a chapter called place of supply. Now, the concept of intrastate supply and interstate supply is going to be different. How is it going to be different? Look at here. Earlier, your understanding would have been that intrastate supply means when both supplier, the one who is making the supply, and recipient, the one who is receiving the supply, if both of them are in same state or union territory. Now, because of introduction of this chapter called place of supply, this concept is not what we are going to follow. How is this going to be different? Now, we are saying that intrastate supply would be when the correct understanding is now the supply is considered to be intrastate supply when location of supplier and place of supply are in same state or union territory. This is the correct understanding of it. Generally, place of supply is location of recipient only. However, in some cases it can be different. So the correct understanding is consumption. Consumption is being denoted by the term place of supply. And how do I check the consumption? Normally, recipient's location would be the location where consumption is happening. But is it going to be always the recipient's location which is going to be the place of consumption? No. Are you understanding? So they said if the location of supplier and place of supply are in same state or union territory, we call that supply as intrastate supply, and we would levy CGST and SGST of the consuming state. Let's take an example to understand this. Without understanding this fundamental, we'll not be able to go through the set of questions that I'm talking about. What is that we are trying to approach? We are trying to approach a question set called as net GST computation. Now, because of the new syllabus, your net GST computation is going to be slightly different. They're going to test you with the concept called intrastate supply, interstate supply together with place of supply concept. Okay. Now, the provisions of place of supply we will discuss on the go, but let's try to understand the very basic. Say, Mr. Raju is located in Chennai. He is supplying to Mr. Gopal, who is located in Bangalore. But if you apply the provisions of place of supply, you understand place of supply happened to be Chennai itself. Question to you is it an intrastate supply or an interstate supply? What supply is this? Answer me on the chat box. Now we said, what is an intrastate supply? When location of supplier, suppose Raju is supplying goods to Gopal, location of recipient, both are in two different states. This is in Tamil Nadu, this is in Karnataka. However, place of supply is in Tamil Nadu, so it will become what supply? Intrastate supply, not interstate supply. So what will be applicable on this? CGST and Tamil Nadu SGST would be applicable on this bill. Suppose this goods is worth 10,000, GST rate happened to be 18%. So the bill will have CGST 9%, SGST 9%, which is 900, 900. Are you understanding the difference of concept between the earlier thought process and because place of supply being part of your syllabus? Is it clear to all of you? Now let's move to interstate supply. Now you should be able to tell me what is interstate supply. Your old understanding is going to be interstate supply is when supplier and recipient, these are in two different state or union territory. This is not the concept. What is the concept? The concept is now location of supplier and place of supply are in two different states or union territory. This is the correct concept. Are you guys understanding? Same. It could be the case that Mr. Raju from Chennai is supplying to Mr. Gopal, who is from Coimbatore. However, place of supply happened to be Hyderabad. Tamil Nadu, supplier and recipient are in Tamil Nadu, but place of supply is in Telangana state. Would it be an intrastate supply or an interstate supply? It would become an interstate supply. Now, I'll tell you why location of recipient cannot be place of supply always. I'll tell you that reason when I'm discussing intrastate supply, interstate supply for the section part. Okay, the concept is very simple. Not always recipient's location would denote consumption. In GST, which state receives the revenue? Consuming state receives the revenue, right? That's the whole fundamental concept of GST. Now you think about a scenario wherein C.L. Lakshman, who's located in Cochin, Kerala, goes to Chennai, stays in a hotel there in Chennai to take classes in Chennai. The accommodation services are consumed where? Even though in this particular case, the recipient is located in Kerala, the consumption happens in Chennai. The revenue has to go to Chennai. Or C.L. Lakshman, who's a consumer, travels to Chennai, eats some food at a restaurant in Chennai. The consumption is happening in Tamil Nadu. Should Kerala government be getting this revenue? No. That's the whole idea. So in GST, 50% of revenue has to go to consuming state, not the state of the recipient always. Sometimes, most of the cases, consumption is done by recipient, place of supply would be recipient's location. In some cases, it can be different. That's why we change the concept from the understanding of location of supplier, location of recipient to location of supplier and place of supply. Are you guys understanding this? Can I have a quick yes on the chat box? Now, as far as a supplier is concerned, now let's move to computation of net GST payable. Every supplier in India will have to pay GST to the government, right? What is generally the periodicity of payment? Of GST? It is monthly basis. So on an every month-on-month basis, the suppliers will have to compute what is the net GST they have to pay. What do you mean by net GST? suppose a supermarket is the supplier. Supermarket being a trader will make supply to customers. This supply is called as outward supply. Whenever they make outward supply, they will collect tax from customers. Using invoice, tax invoice, right? This will be the suppliers or registered persons. So we call them generally as taxable person. This will be the taxable person's outward tax liability. So every outward supply will create something called as outward tax liability. He would have collected taxes, he is supposed to pay this to the government. Now, what are the outward tax liability that he can have? He might make outward supply both intrastate and interstate. So his liability can be CGST, SGST, it can even be IGST. If he is making intrastate supply, his invoice would contain CGST, SGST. What's an intrastate supply? Location of supplier and place of supply are in the same state or union territory. What is interstate supply? Location of supplier and place of supply are in two different states or union territory. So he can have three types of outward tax liability in a month in terms of taxes to pay. To do this outward supply as a trader, he would have made a lot of purchases. In GST, purchases are called as what supply? It is called as inward supply. It is called as inward supply. This inward supply will give him something called as input tax credit. Inward supply can also be, so he paid taxes that will be availed as credit. So you'll have to satisfy all the provisions to take credit, but what are the credits that he will have? If his purchase was or inward supply was intrastate, he will have credit of CGST and credit of SGST. If his purchase was interstate, he will have a credit of IGST. Now, what do you mean by net GST payable for a month? It is nothing but outward tax liability minus input tax credit. This is what you have to do on a month-on-month basis. And this is what is called as net GST computation. Are you guys clear on whatever I have explained so far? Can I have a quick yes on the chat box? Now let's look at a question. The first category of questions, let's look at that. So first thing that we need to understand is I can have three types of outward tax liability. I can have three types of input tax credit. Can I utilize every liability against every credit? So, can I use every credit against every liability? No, I cannot do that. So, we will have to learn Section 49 CGST Act. Which talks about manner of utilization of credit. Manner of utilization of credit. So what does that manner of utilization of credit says? You will have, what is the priority in which I'll set off the liability? Your outward tax liability can be of three types: IGST, CGST, and SGST. And you can have input tax credit of three types. Credit number one is IGST. First, you should utilize your IGST credit to pay your IGST liability. That is rank number one. And then they say you can utilize your IGST credit balance to pay CGST or SGST in any order. So rank number 2 would be again CGST or SGST in any order. Now, for the examination sake, how do you fix the order? I would call this as set off to get minimum liability, cash liability. And I'll tell you how that set off can be done. Now, you can go to other credit. What is the second credit? CGST credit. You can go to CGST credit only after IGST is fully set off. You can go to other credits. What is the other credit? CGST credit. So CGST will be first set off against CGST. That is your rank number 3. Then CGST can be set off against IGST. That is rank number 4. Can you set off CGST against SGST? No, that is not permitted. Then let's take SGST. SGST would be first set off against SGST. That's rank number 5. Then set off against IGST. cannot be set off against CGST. Are you guys understanding? So this is the first learning that everybody should have before we go into understanding the net GST computation. There is a manner of utilization of credit, and I have to ensure that my manner of utilization gives me minimum cash liability while solving the question for ICI, because in practically you have your own wishes to do the set off, right? IGST should be first set off against IGST, then against CGST or SGST in any order. Only after IGST is fully set off, then we will go to CGST and SGST. CGST will be set off against CGST, then against IGST. CGST, SGST is not permitted. SGST will be first set off against SGST, then SGST will be set off against IGST. But SGST, CGST is also not permitted. Are you guys understanding this? Shall we look at a net GST computation question? Okay. So this is practical question or numerical question. Type 1 is net GST computation. I will give you a format that I wanted to use, which even we will use even most complicated question also, we will use the same format. But the complication would be different. Okay, so that's the structure in which I wanted to follow. Can I start? Can I have a quick yes on the chat box, guys, to know that you guys are there? I needed confirmation again and again. Okay. We'll solve question number 21 in value of supply chapter. Okay. Simple, straightforward, net to GST computation it is. Let's go ahead and then read the question. I'll read the question for you. Be with me. And then we will start working out together. That's the structure that we're going to follow. We're making the fundamentals correct here. Mr. NY, a supplier of goods pays GST under regular scheme. Mr. NY is not eligible for any threshold exemption. He has made following outward taxable supplies during September. Particulars, rate of taxes and amount is given. They said product A is taxed at 6% CGST, 6% SGST, that is 8 lakh. Product B is taxed at 9% CGST, 9% SGST, 2 lakh. Then there is interstate supply of product A, which is 12%, 3 lakh. Product B 18% 1,50,000. He has also furnished following information in respect of supplies received by him during September. Intrastate purchases of product A is 2 lakh, product B is 1 lakh. Interstate purchases of product A is 1 lakh, product B is 80,000. They are saying they also have opening credit. Okay, they have input tax credit at the beginning of September. Beginning of September means what credit is it? It's called as opening credit. What is the meaning of an opening credit? It means that last month I had excess ITC than my outward tax liability. So what will I do with this excess ITC? I will carry forward it to the next month. This is called as opening credit for our computation. Okay. Both inward and outward supplies are exclusive of taxes wherever applicable. All conditions necessary for availing ITC have been fulfilled. They are asking you to compute net GST payable by Mr. NY for the month of September. Make suitable assumption wherever required. Okay, how do I approach a question like this? They have given you, this is like a vanilla question, very simple, straightforward question wherein we compute what is net GST payable. How do I compute that? I need to compute it in 3 different steps. Do you remember in our notes that we have written, net GST payable is nothing but outward tax liability minus input tax credit, right? Our computation is also very simple. First we will compute what is outward tax liability. Then we will compute what is input tax credit. So part A of our computation would be outward tax liability. Part B of our computation would be input tax credit. Part C of our computation would be net GST payable. So we are consolidating our tax in terms of tax liability, consolidating different taxes in terms of input tax credit, and finding out what will be the net GST payable. Let's start. I want to fix the format, that's more important for me in this question. So every computational question should start with a title. So for whom am I computing? For NY. Which month am I computing? September. What am I computing? Net GST. So I will start by writing. You should write it with me. Okay, start writing with me. What is the title? Computation of not outward tax, computation of net GST payable. By Mr. NY for September. How do I structure the table? Particulars, value, CGST, SGST, IGST. Now, can I have this first IGST, then CGST, SGST? You can have it, there is no problem in it. But if you look at ICAI, they have maximum used this structure in most of the questions. So it's much easier to use CGST, SGST, IGST structure than any other thing. So, but in some question they are giving IGST first also. Okay, but we will follow this for an easier understanding. Then I'll write part A. What is that first thing I'm computing? Outward tax liability. Computation of outward tax liability. To compute outward tax liability, I need to know what is my outward supply. How many outward supplies I have in this question? I have 2 outward supply, one is intrastate, another one is interstate. I have product A and product B. So first let me write intrastate. have product A. What is the value for product A? It is 8 lakh. What is the rate applicable for product A? The rate for product A is 6% and 6% each. That is, it's a 12% product. What will be 6% of 8 lakh? Compute and tell me. $48,000 and $48,000. Okay. You have to work out with me. I'm not going to do the computation. You do it for me. Then product B. It is taxed at what rate? 18% rate. 9 and 9 it will come. 2 lakh. So what is 9% of 2 lakh? 18,000. This is my intrastate outward supply. My second would be interstate outward supply. For interstate outward supply, again I have product A, which is at 12%, product B, which is at 18%. Now I'll have to look at what is the value for that. It is 3 lakh and 1,50,000. 3 lakh and 1,50,000. I'll put dash over the CGST SGST column because I'm going to compute IGST. So what is 12% on 3 lakh? 36,000. What is 18% on 1,50,000? 27,000. Is there any other outward supply in this particular question? No, I don't have any other outward supply in this question. So what will be my total? Right, total. I'm computing my outward tax liability here. My outward tax liability total would be what? 18,000 plus 48,000, which is 66,000. This is also 66,000. This is 63,000. I put only one underline. I don't need to total the value column. I just need the total for GST to set off. Are you all with me? Now let's look at part B. What is that we do in part B? Computation of input tax credit. computation of input tax credit. I'm finding out what is my ITC. Now I'm not even doing set off anymore. I'm just consolidating everything and then finding out what will be my outward tax liability, what would be my input tax credit. That's it. I'm there only. Now every time when I compute input tax credit, I should look at, do I have an opening credit? I have an opening credit or not? The question, do I have an opening credit? Yes, I have an opening credit here. 48, 40,000, 28,000, 44,600. 40, 28, 44, 600. What is the order? CGST, SGST, IGST. $44,600. 40, 28, 44, 600. Then I should look at, do I have inward supplies? Yes, I have purchases also. That also I have intrastate purchases or intrastate inward supply. Under that I have purchased product A, a purchased product B. What is the purchase of product A? 2 lakh, product B is 1 lakh, intrastate. Product A is taxed at 12%, product B is taxed at 18%. So my inward supply is intrastate, so I'll have CGST, SGST at 6%. What is 6% of 2 lakh? It's 12,000. 12,000. 9% of 1 lakh, which is 9,000 and 9,000. Now I have interstate purchases also, right? Interstate purchases 1 lakh and 80,000. There also I have product A and product B. Product A is what? Product B is what? 1 lakh and 80,000, right? So we rewrite 1 lakh and 80,000. How much will be my credit here? Since my purchases are interstate, my credit would be an IGST credit of 12% is 12,000. 80,000 into 18% would be how much? 14,400, right? So can you tell me what is the total of your ITC? What is my total credit? Again, I'm only totaling the GST columns. 40 plus 12 plus 9. 61,000. 28 plus 12 plus 9. That's only 49,000. 44,600 plus 12,000 plus 14,400. That is how much? 71,000. Right? Put another one line. Are you guys with me here? Then we move to part C. This is where we do the set off. Now if you look at, this is a simple straightforward question, right? Now how this can be complicated also we can look at. Later when I discuss all other question, you would have some of this outward supply which are exempted, so I don't have any taxes there. Some outward supply where my customer has to pay tax under RCM. Understanding? Some outward supply wherein I don't have to pay taxes, some outward supply where they will pay taxes and stuff like that. Some are exempted, some are taxable under RCM can come. Some input tax credit can be blocked credit. Some input tax credit can be ineligible. Some inward supplies would be exempted. Some inward supply I have to pay tax under RCM and then take credit. Understanding? Is it clear to all of you? So what happens? Whenever you have these changes, the format remains the same. You guys with me? So we will do the, since the format remains the same, we will do the question in the same format, but then the answers when the working notes would change. Okay. In this question, we have taken this to be 1 lakh only, interstate product A. Okay. So that's how we will do it. Okay. I think in your practice question there is 1,50,000, is it? You can do it with 1,50,000, no problem. Let's try to understand. Now we are at part 3 or C, wherein we will go and do net GST payable. This is where we will do the set off. Computation of net GST payable. What we will do? We will rewrite part A, which is outward tax liability. Only taxes I will rewrite. What is my outward tax liability? 66,000, 66,000, 63,000. Then minus, what is the first credit that I have to take? I have to take ITC of IGST. I'll take first ITC of IGST. ITC of IGST is how much? 71,000. First I should set it off against IGST liability. What is my IGST liability? It's only 63,000. So I will set it off against IGST 63,000. Now how much extra credit do I have? I have 8,000 extra credit, right? I have 8,000 extra credit. Now how do I set off? What is that the question says about the extra credit? Or what is the provision that we discussed was talking about utilization of extra credit? After setting off IGST, if you have IGST credit, can I move to CGST now? No, you cannot move to CGST now, because before you go to any other credit, you have to ensure that your IGST credit is fully set off. So where would you set off this? You will set off this in CGST or SGST in any order. Now for examination, how do I pick the order? I'll pick the order based on gap. How do I ensure I get minimum liability? That's my question, right? To get minimum liability, I should set off based on, even though provision says that if you want you can set off 8,000 fully in CGST, 8,000 fully in SGST in your order. Half, anything you can do. But we will do the set off based on minimum liability. Okay, I want to end of the day get minimum liability. How do I do that? I'll tell you the method. You look at what is your CGST liability. It's 66. What is your CGST credit? 61. Can you set off CGST liability with CGST credit? Yes. So if I take 61, set off against 66, how much is the gap? 5,000. I have to fill this 5,000. If I fill this 5,000, my liability will get reduced. If I fill more than 5,000, I will have excess credit. So my gap in CGST is 5,000. Similarly, SGST. My liability for SGST is 66,000. My liability for SGST 66, my credit of SGST alone is 49,000. What is my gap? My gap is 17,000, right? So I can fill 17,000 of SGST with the gap, 5,000 of CGST with the gap. If I use for any of this, my liability will get reduced. Beyond if I use, I will have excess credit. So always remember to fill the gap first. How can I fill the gap? I only have excess credit of 8,000. I can either fill the gap fully in SGST because I have 17,000 gap there, or I can fill 5,000 in CGST, 3,000 SGST. That's also fine. Are you guys with me? But instead of using the 17,000 gap, if I go set off 8,000 to CGST, which is allowed, right? But I will not get minimum liability. So let's fill 5,000 the gap of CGST first and rest 3,000 in SGST. I will get minimum liability. The same if I do 4,000 also I'll get minimum liability. What do you mean by minimum liability? Adding all your GSTs, I should reach at the minimum liability. That's the understanding. Okay. Let's do this balance set off. Next is less ITC of CGST. I will set off CGST with CGST, 61,000. Nothing else left. Then ITC of SGST. I'll set off against SGST. So what is my net liability? What is my net GST payable? 0. $14,000. 0. Or I can get 5,000 and 9,000. That's also total 14,000, right? So I cannot go below 14,000 in this question. That's your understanding. If I get minimum liability of 14,000, can I go below 14,000? No, I cannot. Are you guys understanding this? Now I need to write working notes. This is like a very straightforward question. Then also I need to write working notes. What if this question is only testing your ability to do the set off? Then your working note should be like this. ITC of IGST should be fully utilized before ITC of CGST or SGST can be utilized discharge of liability. Number 2, ITC of IGST will be first set off against IGST, then against CGST or SGST in any order. Three, ITC of CGST should be first set off against CGST, then against IGST. ITC of SGST should be first set off against SGST, then against IGST. This is the first set of question that you should be solving. Is it clear to all of you? Okay. Cool. So this is the fundamental basics that you need to understand to start with GST. Okay. If you know this much, you're good to go with good number of chapters and questions. Now, every question that we discuss would contain some kind of an GST computation. Everything can be brought in ultimately into an GST computation. So this is like the fundamental that you need to understand. So we're good to start with the next chapter. We're going to start with value of supply. Okay, that's our next discussion. I'm going to discuss a new chapter called value of supply, but I'm not going to discuss that now. I'll do it in the next session because I have a quite number of students asking me that they are not able to join and things like that. So I'll sort that first.